Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry and today is Wednesday, March 30th. The time is 2 a.m. GMT. And so for today, we are going to take a look at the chart of the Hangseng Index. This is a Hong Kong stock market index here. Now this is a 30 minute chart here, short term. We can see we ended this with 2, okay, and this is a higher degree cycle here. This is, let me double check, this wave 2 in blue here is the super cycle, right? So it's a very high um, uh, time frame or very high sort of cycle, okay, and that means we are according to discount, we are starting a new wave 3 super cycle to the upside, and we just barely start here. We just have what looks like a 5 waves here, ending with 1 2 3 4 5. So now we're looking for a pullback to find support against 18235 and then continues to extend higher, right? And that's basically what we're looking at. Now let's suppose if we don't go down anymore and we just break higher, just there's a possibility if we do that, this is your wave 2 and that we have started the next leg up, or at the least this could be some kind of an ABC. Now if it is not bullish, then at least it is some kind of an ABC with what looks like a 5 ways up from this low right here. Now let's zoom out and look at the weekly time frame. Let me put this wave 2 here on the weekly time frame. This is the weekly time frame. So let's check this out, zooming out everything to as much historical data as possible. So this is the all-time high in the Hangseng Index back in 2018. So unlike the US indices, the Hangseng Index never made new high after topping out in the 2018, right? Whereas US indices keep making new highs still. And you can see this was a massive decline. Actually, it's a massive correction here from 2018 to the last low this year. This is a 4 years kind of correction. The high is 33,000 and the low is 18,000. So this is already 50%, more or less 50% from the high to the low, right? Imagine if this applies to the US indices, so you're talking about 50% cut in the S&P, for example, from the present value, right? But so this is a pretty big correction here, this 4 years, and but couple of things that is interesting here, you can take a look here. Now indices in the very long term is always going to be bullish, guys, because it's a reflection of human progress, civilization, earnings, and so on. Yes, it can have a bearish market and so on every now and then, like this one. This is the 2008 here, the Lehman Brothers, which affects every indices, so you can get a massive panic sell-off and things like that. But overall, when you look at it from the historical perspective, this should continue to go up, right? And it will not go to zero, right? Because that's the way it is. Now you can see this pullback here from the 2018. You can see the characteristic of the move. This one is a 3 swing, right? It's a 3 swing with a 100% extension over here. It's a typical characteristic of a corrective structure. And then you got this 3 swing, and then you got a reaction or a correction. It breaks above this trend line, right? So this is your correction out of this 3 swing down, right? So you have a 3 swing down and you have a correction against that 3 swing down, and then you make a new low after that, make a new low below here again. So you got this 3 swing. So you got a 3 swing here, and then you got another 3 swing, but the bigger 3 swing, and that is also in itself still a corrective structure characteristic, right? And again, if you measure the extension and you find out that this is also 100%, so it's almost like a textbook perfect corrective behavior three swing 100%, three swing 100%, and you see the reaction higher from here. This one, remember, there was a lot of panic here and a lot of news. Oh, the Chinese stocks is getting hammered because of a lot of things concern this and that, and then you can see when it hits, and then suddenly there's news about the government, Chinese government did some kind of, I don't know, like some positive policy or whatever, and then rallies. It's always like that. News always came late to justify the market move, but the technicals is kind of doesn't care about the news, and it just looks at the price behavior and identifying support and resistance areas, and you almost certainly see some sort of reaction from the support area, and then after that there was some news coming in to justify the price action. Okay, so here we got this rally right from the lows, and actually we managed to buy this in the live trading room at this level. So now, but then it's still, the rally is still nothing, guys. I mean, take a look at this. The rally is still kind of shallow comparatively speaking if you look at the weekly. So if we go to the 1 hour time frame, then yeah, the rally is just nothing here. It's just if this took 4 years, then we are not talking about like day trading where you're gonna close position 24 hours, because eventually if this is really a wave 2 here, like what we are showing over here, then this got to be a wave 1, and you're talking about a long term move to the upside, which can be multiple years, right? Which can be multiple years, because this took 4 years and this is only a correction. So, and now step by step, so as long as we stay above 18,235, which is the low back in March 15, 2 weeks ago, we can see more upside. So again, like I said, even if you are bearish everything, right? Some people are always bearish everything. So let's say, oh, we're gonna, I don't know, the market is gonna collapse, everything is gonna collapse, something like that, right? A lot of people are pessimistic and bearish. So at least then, if that's the case, then this could be some kind of ABC, right? Some kind of ABC. If this is a valid solid 5 waves, then at least we can look for some type of ABC correction, right? And then if the war is going to end, okay, then maybe we can collapse again from here and goes to Stone Age again, right? But at least a 3 waves rally is expected, due to the 5 waves up from here, right? Due to the 5 waves up from here, we can have a 3 waves. So now in the shorter cycle, it's interesting. It's getting pretty strong here. So again, if it breaks above this peak, that means there's a possibility that wave 2 could have ended here, right? Wave 2 could have ended here. We have that means we could have started with 3 to the upside. Otherwise, if not, then again at least some sort of ABC is possible here before we turn lower again, if this is a bearish market. Okay, but so far what we see is a 3 swing, which is corrective. This is also another 3 swing. Everything is at 100%, no extension on the 3rd swing, or so-called wave 3, right? No extension. So far it displays the behavior and characteristic of a correction. Okay, so that's the update here, guys. And as always, if you want to get regular updates in indices, stocks, Forex, commodities, we do have 14 days trial. The link is provided in the description of the video. I'll see you all again next time. Have a nice day, everyone.